This is Business Week Armenia, SivilNet's weekly economic digest. Here's what's making headlines in Armenia this week. Armenia's economy continued to grow in the first 3 months of the year, though at a more moderate pace than in recent years, a trend largely in line with government and expert forecasts. In a press release this week, Armenia's Statistical Committee said the country's Economic Activity Index, a government indicator that corresponds roughly to economic growth, increased in the first quarter by 4.1% year-on-year. That was largely fueled by booms in construction, services, and agriculture, which all expanded by double-digit figures year-on-year, the statistics show. Wholesale and retail trade grew more modestly. In sharp contrast, industrial production fell by 18.5%, while international trade decreased by more than 54%. Observers attribute those drops, at least in part, to an apparent slowdown in Armenia's mineral re-export industry. In 2023, Russia began shipping large amounts of gold and diamonds through Armenia to the United Arab Emirates, China, and Hong Kong in an effort to get around international sanctions on its lucrative gold and diamond sectors. However, changes to Russia's export duty policy last year diminished exporters' need to use Armenia as a conduit to world markets, according to the German economic team, a Berlin-based think tank. Likewise, in its latest monthly update on Armenia's economy, the World Bank said it believed this year's decline in trade was due to contraction in re-exports of precious and semi-precious stones. Overall, this quarter's 4.1% growth corresponds roughly to observers' forecasts of a 5% expansion this year. Last year, Armenia's gross domestic product increased by 5.9% in a clear sign of moderation following 2 strong years of expansion charged by massive inflows of capital and labor from Russia and a rerouting of part of Moscow's international trade through Yerevan. Those knock-on effects of Russia's full-scale invasion of Ukraine helped Armenia's economy grow by 12.6% in 2022, followed by a further 8.3% increase in 2023. The operator of Armenia's long-stalled Amulsar gold mine will take a $150 million loan to launch operations from Ameriabank, one of the country's largest lenders, in a major funding shakeup. Previously, Lydian Armenia was set to take in that same amount from a consortium of several other local banks that did not include Ameriabank. The change was first revealed in an amended document published this week by Prime Minister Nikol Pashinyan's office. Neither Lydian nor Ameriabank immediately commented on the matter. Earlier this year, the Armenian government decided to grant Lydian a guarantee on the $150 million loan it says it needs to finish building production facilities at Amulsar. That came after the Russia-led Kazakhstan-based Eurasian Development Bank declined last year to finance the project in still unclear circumstances. Amulsar, Armenia's second biggest gold deposit, has been embroiled in political and environmental controversy for years. Lydian, which is ultimately owned by private equity firms in Canada and the United States, first broke ground at Amulsar in 2016, but construction quickly stalled, and nearly a decade on, mining still has not started. After years of inaction, the government breathed new life into the project in early 2023, reaching an agreement with Lydian to move the project forward in exchange for a lucrative 12.5% stake. Last month, Lydian CEO Haik Aloyan told the Armen Press news agency he forecasts the mine to pay some $120 million in taxes every year and create 750 direct and 4,000 indirect jobs once production begins in the 4th quarter of the year. Armenia has considerable deposits of copper, gold, and molybdenum, and the mining industry is one of the country's biggest sources of employment and government revenue. Many of Armenia's mines are ultimately controlled by Russian companies. In contrast, Amulsar is the only large-scale Western investment in Armenia since Pashinyan came to power in 2018. The Armenian government this week issued more than $256 million worth of bonds on the domestic stock exchange, a signal of increasing borrowing to fight a growing national debt. The bonds attracted unexpectedly high investor demand, with total orders topping $567 million. The Armenia Stock Exchange said in a press release, These figures are unprecedented in terms of both the volume of government bond placements and investor interest, it added. The issuance comes just months after Armenia posted a $750 million Eurobond on the London Stock Exchange, which also saw levels of investor demand exceeding the bond's placement volume. Observers say the moves signal Armenia is ramping up its borrowing in a bid to manage its growing national debt, which as of the end of last year has now surpassed $12.8 billion, pushing the country's debt-to-GDP ratio to more than 52%. This year, Armenia is expected to pay about $2.9 billion to service that debt, which is split nearly evenly between money owed to foreign lenders and domestic creditors. Officials attribute Armenia's rising debt in part to the government's decision to take on Nagorno-Karabakh's outstanding loans and liabilities after the local administration collapsed in fall 2023. Increased government spending on efforts to integrate the more than 100,000 Armenians displaced from Nagorno-Karabakh has also contributed. In 2022, the International Monetary Fund approved a 36-month, $171 million standby arrangement for Armenia to protect against potential balance of payment difficulties. So far, Armenia has treated the arrangement as precautionary and made no withdrawals. Armenia's debt repayment schedule runs until 2054. And finally, you can also check out our latest interview with Caroline Guerina, country manager for the World Bank in Armenia, who stopped by our studio this week to talk about the World Bank's new 5-year country partnership framework with Armenia. You can find the full interview up now on our website at civilnet.am or through the link in the video description below. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.